Our share market has been trained for stimulus. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your shine of coffee because I thought we'd have a look at this interesting article from news.com.au which is discussing, well, something that happens in America quite recently all the time where the share market would respond positively to, well, bad news because they're hoping, the market is expecting more government stimulus, more government money printing, more government intervention or federal bank intervention and government intervention too. So here in Australia, it looks like we've adopted that same mentality in our market because the Australian shares in a perverse sell-off after positive job figures cast doubt over stimulus. Because we had positive job figures, which we've looked at in previous videos, it looks like majority of that has come out of the gig economy. And, well, the market's selling off because the stimulus may not be generated. So let's have a look. It looks like we're adopting that in America. We really are we're adopting the same patterns as America, and we really are in a clown world, everyone. You know, profits don't even matter. Good news is bad news. Upside down is right way up. It's just crazy. It is just crazy. At least it's entertaining. So we can see here that the market is at 58.64 and it fell 18.7 points on Friday. So extending a 1.22% decline in the previous session while closing 0.35% higher for the week. So it didn't end the week at a lower point, but it's not doing too well. I mean, you can see the general trend at the moment seems to be going down, and all the TA people can probably put lines all over the graph and do tea leaf reading to understand what's going on there. Risk sentiment waned as the number of Americans filling new claims for unemployment benefit remained perched at extremely high levels, while US tech-related stock extended a recent slide. Meanwhile, Victoria reported its biggest daily rise in new infections in more than a week on Friday, a day after it recorded its lowest rise in nearly 3 months. The news followed the WHO warning of alarming rates of transmission across Europe, cautioning against a shortening of quarantine periods. So, essentially, it looks like the job figures where, if we'll bring it up here, you can see unemployment went down to 6.8%, completely unexpected by a lot of parties. So our market, our stock market has been trained to anticipate stimulus. So because it was better than expected, it went down. So they'd priced in bad news, or probably even worse news than was anticipated, under the hopes of a stimulus. There you go. The market's an interesting beast. So let's have a look at this article. Australian share investors reacted perversely to better than expected job figures, taking it as a negative sign about future stimulus measures. I mean, it's just funny. It really is. If it weren't so sad, you could laugh at this, really. The Australian share market was perversely sold off after positive job figures were delivered, with investors likely viewing them as a sign further stimulus measures will be less than expected. The benchmark S&P ASX 200 closed 1.22% lower at 5,883.2, while the All Ordinaries fell 1.26% to 6069.2. ThinkMasters Australia analyst Carl Capolingua said losses accelerated after the job numbers came out. Sure, they were better than expected, but I think that was part of the problem, he said. Obviously, markets want to see good news on the jobs front longer term. And considering the lockdowns in Victoria through August and the resurgence in COVID-related negativity more broadly, it was a decent set of numbers. But I think investors took this as a sign that the RBA and the federal government may do less than previously expected to boost monetary and fiscal stimulus. So in a perverse sort of way, the market sold off. I mean, how do you take that, guys? How do you take that? I mean, the market's been trained. Peter Schiff talks about it all the time in the US, happening over there, where you're watching the market. How are they? Actually, I haven't looked at them in a few days. I mean, there, the Dow Jones is at 2765. How's it doing at the moment? Yeah, I mean, there you go. They're definitely heading down. and the Nasdaq and the S&P 500, both. Oh, the Nasdaq is definitely well off that high, and the S&P 500 as well, trending down. Don't worry, I'm sure some money printing, you know, I'm sure something will happen to shoot it back up again. Maybe there'll be a tweet from Trump. I'm only half joking, guys. We were heading down anyway, in line with falls across the region and lower US futures. So lower iron ore prices caused Fortescue Metals to drop 6.4% to $16.23. Rio Tinto shed 3.38% to $99.31, and BHP lost 1.82% to $37.31. Tech stocks followed their US counterparts, with buy now, pay later company Afterpay shedding 5.37% to $73.84. Actually, I'll look up the Afterpay share price, and let's have a look. What's the high? Yeah, that's it. The all-time high was at 95 bucks. $95, guys. And that wasn't too long ago. That was just in August. That was last month. So it's coming off the top there. It's coming off the top there. That's, I mean, if you had bought last month, you might not be happy, but all those people who've held on since the IPO, I mean, there you go. And logistics software firm WiseTech was down 4% to $26.76. Some oil stocks rose after the price of the commodity lifted, partly because Hurricane Sally made landfall on the US coast in the Gulf of Mexico, which accounts for about 1/5 of America's oil production. Cooper Energy put on 1.45% to 35 cents, but Oil Search gave up 0.7% to $2.83. Plus-size women's fashion retailer City Chic fell 6.2% to $3.17 after failing to win a court-run auction for the e-commerce assets of US chain Catherine's, which is being sold as part of a bankruptcy process. Mincor Resources slipped 3.8% to 88.5 cents, despite announcing it will revive its mothballed nickel mines in Kambalda, WA. Concrete additive company Eden Innovations jumped 8.3% to 2.6 cents after providing an update on its progress in the US. ANZ inched 12% higher to $17.32. Commonwealth Bank eased 1.07% to $65. NAB added 0.87% to $17.30, and Westpac gained 0.3% to $16.81. The Aussie dollar was buying 72.77 US cents and 56.21 British pounds and 61.81 euro cents in afternoon trade. So we can see the most interesting takeaway from this is that our market appears to have been trained for the expectation of more stimulus. So good news about the job figures, even if you're skeptical about the validity and accuracy of them. If you're like me and you prefer the Roy Morgan methodology, which is saying unemployment's actually gone up as opposed to this fall, it just shows you. It just shows you what the market is expecting. So what do you think, everyone? What do you think? We have a look here at the ASX 200. Let's zoom out. We'll go out to all data and just compare it. So, I mean, have we hit the dead cat bounce, guys? Have we hit the dead cat bounce, and is the market going to start trending down again? Let's have a look at some commodities while we're here. Gold is at $19.49 US an ounce. Silver's at $26.76 an ounce. We'll go to some cryptos. We'll look at coin market cap. What's Bitcoin's at 10,949, and Ethereum is at 382. I mean, Ethereum has been going a bit crazy. Transaction fees are quite high on the Ethereum network at the moment, just because of, well, all the DeFi. Anyway, guys, let me know your thoughts and opinions. Do you think the Australian stock market is being trained like the US? What do you expect to see happen in the future? As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can simply engage with the videos. Comment, like, subscribe, and share. You can support us financially via joining the channel on YouTube or Patreon, using our affiliate links at Amazon, eBay, Independent Reserve or Kucoin, buying our merch at HeiseSays, using Gold Pass from the Perth Mint, or supporting us via PayPal. Take care, guys. Have a great day. I'll see you next time.